What's up, YouTube? Welcome to More Trades. Welcome to the channel. Now, I'll start off by saying if you guys watched my video yesterday, you would know that I was expecting it. You could see from the title, I said possible pump incoming. And that's what we got. We were holding this green trend line that you see. I've been saying that we are holding this and we might have a push up. We got that push up. Now we're above the value area low, as you can see on the chart. Being above the value area low gives us an idea that we could be heading to the POC. The word is we could. Of course, we could get above the value area low and break down again. We've done it before. It's not the first time. Look over here. We got above the value area low, formed a double top and broke down. We can do that again over and over again. We went all the way up very close to our 800 hourly EMA. That's the 200 EMA on the 4 hourly. And at the moment, this green candle is getting recovered, or was getting recovered, and things stopped. Now, we could move a bit up here in this fashion, like slightly squiggle upwards or just sideways for a bit. I mean, the market has moved enough. We need to maybe cool off a bit and then come down, maybe, or at least come and retest the value area low. It doesn't have to do that. We could continue higher. Now, what are the levels? That's what everyone wants to know. What are the levels to watch for next? I know the levels that I'll be watching next, obviously, is the 200 EMA on the 4 hour or the 800 EMA on the 1 hour. That will be my next zone. At the moment, that is at around 27,626, very close to last week's high. And if we can get above that, then the POC. If we can get above the 28,022, or some people have it on their charts, maybe 28,050, then there's a good chance we could be going up to the 29,400 zone. 29,400. Just to highlight, this is a double bottom. You need to see that it is a double bottom. And you need to know that in the macro, you were, from the lows over here, you were in a strange, not a perfect, but a head and shoulders. This head and shoulders had a measured move from down here, from the lows, from down here. And if we take it to the neckline, that would be essentially somewhere here. We have exceeded the measured move. The measured move would take it to 21, so that's pointless to look at now. But sorry, that was the measured move for the double bottom. For the head and shoulders, which is right over here, the neckline would be this green trend line. Possibly we could say that's the neckline. And the measured move, you take it from the short shoulder, the head, from the head, and you take it to the neckline, and you bring it to the breakout, and that could take it to 33,836. If you remember a month ago or so, I was talking about the 32.5 range. We could get there. But just because we see a green candle doesn't make it that great. I mean, we are still below the POC, 28,022. Next zone, in my opinion, if we can get up above the 28,022, then we could come to the 28,789 value area low of May 2022 range, then value area high of our current range. Our current range value area high is at 29,219. The May 2022 range, I took the fixed range volume profile for the month of May 2022, and I plotted it here with these 3 yellow lines. These are the levels to be aware of. So yeah, that's my projection came out. I said a pump possible incoming. ATR was low, and Bitcoin wasn't breaking down. Despite the moves down, it was still holding. That was my analysis. At the moment, on the smaller time frame, like the 15-minute, we had a nice retest of the 50 EMA, but that doesn't mean we can't break down. It's very possible we can break down to recover the candles that pushed us up. As you know, I always talk about this pattern the Bart Simpson had. It always plays out inverted or even upright. It's the same. So for my analysis, if you're going to ask me, are we going up, going down, no one can tell you for sure. That's a lie. You need to know your invalidation points and your targets. Now, if Bitcoin can get above the 27.7, then you have more upside to go, in my opinion. But 27.6, 27.7 is the level to watch for, which obviously you came all the way up to 27.522 and you got rejected. That would be a strong level of resistance, and you can see you sold off from there several times. But if you can get above 27.6, then you open further targets. As you can see over here, it was a wick of support. Over here, it was a sell-off point. So you need to break that. That will break the 200 EMA on the 4 hourly, which comes around that same zone. All right, I hope you like the update. You need to be aware that downside risk is still there, but we are making progress to the upside. Downside risk is still there because we were in a huge head and shoulders, and we could come all the way up, and at the moment we're bumping this zone. This could be the neckline of the head and shoulders. This zone essentially is somewhat a zone of the neckline of the head and shoulders that you broke off from. So maybe you're having just a bearish retest of the neckline. It's also possible. But once you see strong candles coming in and volume picking up, and you get the retest. Now here you got the breakout, and now you're having the retest of the 50 EMA, the purple cloud that you see. Now, if you were to say, I want to take a long, this could be the zone. But you'll have to have your stop loss at least below the value area low, 27,100, or even below the cloud, or below the SWIC, like a tighter stop, 27,145. So you'd be risking this much of a drawdown before you say my trade is wrong. But if you get another retest and you want to take the trade, you are in the cloud. It is a zone that you could possibly chance along. It's all a game of probabilities and chances. More trades. I'm out. Like it, subscribe.